Hello, all you beautiful people. Welcome to the Fly the Flag podcast. We're a mortgage show for mortgage people talking about mortgage stuff. What's up, Johnny Fowler? How you doing, bro?
How are you, sir?
I'm doing
good.
Well. Thank you.
I'm really happy because I finally ordered my freaking new microphone so
that
I
makes
can
me
sound
happy.
As silky smooth as you and stop using this old Yeti Blue. It's not
so many people think that taking good pictures and making good videos about the camera and having that silky smooth audio is about the microphone, but sometimes you just got to have the voice, man.
So I just told you some good news. I just told you that I ordered a new mic.
It's good. It's going to sound much better. We're going to hear less room noise.
Feel worse about it.
We're going to hear less room noise and more Johnny Fowler. If we've had one complaint from all of our listener and our two viewers, in addition to them, is that they want to hear more Johnny Fowler. So less room noise and more Johnny is always a good thing.
Okay, that was a good save. I got to give it to you that way. I'm excited about today. We have a guest that not only is a personal friend of mine, he is a native to your land. He's out there in California.
A fellow West Coaster.
West Coaster.
That's right.
And he grew up, I think I told you this already, but he grew up in a really not so nice part. I think, and when he gets on here, he can tell us a little bit about it. Mm-hmm. There's like a street that he's told me about that the police don't even go past this street where he grew up and all that stuff. But he ended up and got an amazing story. Started his family very young. It's one of those ones that his high school sweetheart is his wife. All of these things. Started his own insurance agency out there. And I am so not only am I proud to call him my friend, I am so glad to have him on here from that perspective. I'll tell you one of the things, and I'll make this really quick.
Yep.
One of the things that I've always loved is one of the first times I met this guy. We were in one of my classes that I was teaching, and it was out there, I believe, at the Solano Board of Realtors building or something like that. And he'll correct me if I'm wrong, but one of the things that I was doing and explaining, especially for insurance people, is, so just picture this. You've got a room of about 120 real estate agents in it, a little bit of a mixed group. So there's other besides real estate agents, but mostly real estate agents. And one of the things that realtors need to know more about is insurance, but it's not just realtors. And one of the things I showed him is I do this, and I do it in all the classes that I have realtors. I said, okay, do you want me to show you how to gain more business as an insurance guy? And yeah, of course. And I said, okay, watch this. You ready? And I say, okay, who in this room has insurance of any kind, whether it be health insurance, whether it be liability on your car, homeowners insurance, whatever it is, who in this room? So obviously 99.999% of the room raises their hand. And I look at the insurance guy and I said, now watch this. Everybody in this room that understands their insurance from one side to the other, and they know everything about insurance, and they even understand their policies, please keep your hand up. And 99.999% of the room drops their hand.
Absolutely.
And I told him at the time, easiest thing in the world is teach your people about insurance. Now, he took this a step farther. As soon as he heard that, and as soon as he saw that, and he may have been doing it before, I don't know. But all of a sudden, he started really helping and teaching and bringing people in. And I will tell you this, I was with that company that I can't mention their name out of San Antonio, Texas, USAA, for 22 years, left them because every year my policy got higher and higher and higher. And when it got to where it was about $5,000 a year higher than everybody else, he got his Texas license, and he's now my insurance agent for the past, ask him, 4 or 5 years now. So bring him in.
I was going to say, let's ask him. Welcome, Shane Eastman. Thanks for being with us today.
Mike, Johnny, super pumped to be here. Thanks for having me on.
Absolutely.
Good.
Well, tell us about that good life you're living. Johnny's built us up to. I mean, you're an American dream guy,
right?
Yes. Right?
Absolutely. The American dream is alive and well. Don't care what social media tells you.
So, before we get into your backstory and stuff like that, let's offer some value to the listeners and the viewers straight off the bat. What are you doing to educate people, and why is it working for you?
So, to Johnny's story, the aha moment that I had, I've been doing video, social media since the MySpace days.
Okay.
The aha moment that Jonny gave me was, listen, insurance is lame. Let's be honest. Nobody wants to talk about it. I don't like talking about insurance.
It's a necessary evil, right?
Right. What I had to do is I had to conceptualize, okay, what do people want to hear about? And what they want to hear about is real life experience. And so what I do, I started this thing called the Insurance Pro Tip of the Day. And basically where the content came from is a claim that I was working on, a situation where somebody was uninsured, or someone thought that they had coverage, but they didn't have coverage. And I just started doing these little, 5 to 7 minute tidbits. And listen, man, it blew through the roof. And I'm like, people really want to hear this. But it wasn't until I personalized it, hit on the pain points, hit on the places where people can connect, that I started gaining the success.
Was there a particular pain point that you hit on that caused a certain level of growth or got a certain response that made you think, I need to do more of that?
So it's, I have a diverse audience. And so that there's not one in particular topic, subject or insurance policy. It ranges based on, where the market's at, who I'm talking to, who your viewer is that's listening. Small business owners, perfect example. I love working with small business owners. I am a small business owner. I love working with them. What I found, like Jonny said, is by and large, these people really don't care about insurance. They're passionate. They've gone into business because they're passionate about what they do.
Yep.
They really don't care about insurance. They just want to make sure when something happens, it's not going to financially end them. Right. And so what I did is I started, again, nuggets. And then the response was this. I don't want to know all that. I really don't care. I just know, and I need to know that you know what you're doing. You have my best interest in mind, and I'm going to give you the ball and let you run with it and do what you do. That's the client that I go for time and time again. I don't care about the rate shopper. I don't care about the sisters, brothers, uncles that was insurance agent for like 3 months after college that tells you, hey, this is how insurance is. I have no time for those. All I want is people that understand the value of insurance, understand the value of having someone in their corner. You do what you do.
So I'm trying to translate this to our typical audience, right? Which is mortgage loan originators and people who are trying to, and I mean, let's be honest. If you're selling something, you're selling something.
Sure.
There's a lot of similarities across all of sales. All I'm hearing from you is trust. The best way to get a good review, the best way to get a lasting client, the best way to build a strong relationship is to work with people who trust you. And you're offering them just enough education, not to where it's overwhelming to them,
Right.
but just letting them know enough things to where they have an understanding that they didn't before, and also that they know that there's a greater understanding that you have, which enables them to trust you. And I want to talk to mortgage people specifically right now. You don't have to do every loan. You don't have to help every single borrower.
Say that one more time for the people in the back.
You know what I mean? You don't have to work with every single person. You don't need to offer every single product. There's parallels between selling and growing social media and growing channels. The best thing that you can do is have a niche and be an expert in it, right?
100%.
And I feel like that applies to salespeople of all kinds.
So 2013,
have that niche and stop trying to do everything for everyone.
Well, it goes back to knowing your audience.
Yeah, 100%. Or at least, even if you don't know your audience, try to choose one.
Right, that's what I'm saying.
Try to pick a specific client type that you're talking to.
A 24-year-old kid is not going to relate to somebody who needs a reverse mortgage.
Not that there's anything wrong with making mortgage content for 24-year-old kids. It just shouldn't be about reverse mortgages.
Agree, 100%. Yeah.
No, absolutely.
I am so old. I just realized it. That was my aha moment. I am now old because I called a 24-year-old person a kid. It's official.
So it goes back to marketing, right? The biggest mistake that I see insurance agents making in the marketplace when it comes to marketing, the first thing that you have to do, paramount, you have to identify your AAA client and market to them and to them alone. Why? I don't want to market to everybody. I don't want to buy leads. That's in my industry, everybody wants to buy leads. Oh, you got to buy leads, and this is how you buy leads, and this is how you pull leads off of. I don't want to talk to everybody.
Do you do anything with client profiles, just so you can kind of visualize who that target client is? I've done this before, and it's been really helpful when communicating to a team who's creating maybe somebody's creating a presentation or a webinar, or somebody's helping me edit a video or help with a script or something like that. Creating client personas is huge.
100%.
Because now we're not just creating this information for, I don't know, anybody who wants to listen to it, but we're creating it for a specific person. And that person might be a first-time home buyer, female, who has kids but is divorced and is in their mid-30s and lives in this part of the country, and maybe you even do some Google image searches or you use AI to type in a prompt and generate an image of somebody. And if you can put all that together and say, listen, we're making this, but this is who we're making it for, then all of a sudden you have directed content at a specific audience. And it's the person that you want to market to. And everybody can get on the same page a lot easier. That could help branch managers and business owners out there.
Going even one deeper.
Yeah.
Find your target client. Then find the segment of that client that is underserved. So for instance, example, let me put it back into my world. Classic car insurance from a SEO standpoint. There's billions of dollars dropped into classic car insurance on the internet.
Sure.
So I looked at it and I said, hey, how do I get a segment of this business without having to pay millions of dollars to be there? And what I did is I started targeting lowrider insurance. Now I'm not talking
interesting
$1,500 buckets. I'm talking $150,000 58 Impala show winners. And listen, here's the beauty. When I started marketing these people, I started getting wealthy people from all across the U.S. that came from where I came from, doing well for themselves later in life, had this car that, when they were a kid, that's the car. And listen, they're homeowners, they're business owners, they're wealthy, they understand the value of insurance. Your target market, and then look for the segment that's underserved.
I love it. The other word for that is called arbitrage, and it's something that I talk about a lot within loan programs. We can choose certain loan programs in the mortgage industry to create some sort of an arbitrage, becoming an expert in that. Because from your experience, you targeted lowriders, high dollar lowriders, things that are winning competitions, things that are getting thousands, if not millions of views on all the social media outlets and things like that. But did one single person who owned one of those lowriders that you helped insure, did one single person have that vehicle as their only vehicle?
No.
And how many of those people did you do insurance for on the rest of their fleet?
All of them.
Exactly. It's choosing that's what Amazon did in the beginning. They became the best at books until they were so good at books that the clientele said, you got to start selling us other stuff like this. It's just that arbitrage opportunity is the foot in the door. That's huge.
Well, the other thing too that I like about him finding that niche is, one, it's something that he can not only relate to, but it's something that he's got an education in. And that doesn't mean that you can't get educated in something that you don't have an education in, but it goes even deeper than that. It's the fact that the people who have what he wants to work with understand the value of a dollar. And this is not, listen to what he said before. This is not somebody's uncle's, cousin's, brother's, doctor's, gynecologist that went to college for 4 days, and got their insurance license by accident. So these are people who understand. And I love the fact that he has figured out who his customer is, and he does so well with his customer. It's kind of cool. I love being on both sides of this because one, I am one of his customers, but two, I don't care.
What kind of lowrider do you have?
First of all,
Johnny doesn't have lowriders, but Johnny has some cars. And hey, proof is in the pudding. Johnny bought a new car. Car shall remain nameless. Johnny, I reached out to you and I said, make sure that you have what kind of insurance coverage on that new Viper you just bought.
Well, you just said the car is going to remain nameless. Then you said it.
I forgive him.
I will tell you this.
I want pictures.
But I do remember this. He did tell me, he said, by the way, do you know what the life expectancy or whatever the word is for the policy on somebody who buys a new Viper? And it was something extremely long, like 14 seconds or something like that.
87% of Viper owners crash their Viper on the way home from purchasing it.
Did you hear that number?
Is that a real stat?
That's a real statistic.
No.
I kid you not.
That's insane.
So agreed value coverage is
agreed value. That's right. Yes,
coverage, right? And so you have these people that have these vehicles that are exorbitant in value. I mean, you can't blue book a Viper, right? The blue book is here, and then the actual value to buy.
Yeah,
one
you can blue book it, but it's
right?
not going to be right.
Right. And so you have everybody running around. And they've got these great, exotics, highline vehicles, and they're running around with actual cash value. And then they get into an accident and they take a $50,000 bath because their policy wasn't written right. Yeah. And then they call their insurance agent. You're like, hey, what the heck? You're like, sorry, I thought you knew. Oh, okay. Yeah,
I will tell you this, and it was, I guess it was 20, whatever, how many ever years I've been with Shane minus the time with USAA. At one point we were with, I think it was a local State Farm guy. And I'm not kidding. At the time, I was driving one of the Ford F-150 Harley Davidson trucks, and I'm coming home from the airport. I just got done with a trip. I'm coming home from the airport. I'm in my truck, and it's still brand new. There is a truck and trailer in front of me. The guy, this is even before you could watch videos on a phone.
Yep.
So he probably had like a big screen in the front of his truck, or so. He wasn't paying attention. Swerved, hit a barrel. Barrel came up, landed on my hood of my truck.
Oh.
Blah, 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 blah. Had to take it in, get it repaired. When I got there, my rental car that they gave me. Now, at the time, I had the Harley truck, a new Corvette. The family car was a Volvo S60 whatever, and a couple other cars on there. My rental car, my coverage for my rental car was a Ford Escort. I don't know if you remember Ford Escorts. But
yeah.
So I got my car, and I asked the guy at the rental car place, why am I getting this? He goes, that's all your insurance covers.
Mm-hmm.
So I drove immediately over to my insurance agent's door, and his name was, probably can't say it, Dick Shemitis. Went out, put my arm around his shoulder and said, hey, you see that car right there? And he goes, yeah, that little blue. And I said, yeah. I said, that's my rental car because my Harley truck is in the shop getting the hood fixed, and that's my rental car. He said, why are you driving that? And I said, that's a great question. I was going to ask you, why am I driving that? And he said, well, it saved you $19 a year to do this coverage. And I looked at him. I said, Dick, you realize that by saving me $19 a year, you just lost all of my insurance. I will never renew with you. I'm leaving you today.
Yeah.
I will not for $19 a year. You just lost everything.
Yeah. Yeah. It's just about taking care of people and making sure that they have what they
Classic
need.
example of not knowing your customer.
Yeah.
Yeah. Absolutely. And here's a good tip out there for anybody who's looking to buy a car or looking to get new insurance. Specifically when you're buying a car, gap insurance is a great thing to have. And the car dealers will try to sell it to you. And not a whole lot of people know that you can get gap coverage through your insurance agent for way cheaper than the dealers will ever sell it to you for. Gap coverage, for those who aren't familiar, is when you owe more than your car is worth and your car is totaled, then you're stuck with the difference because you still got to pay off the car. Well, gap insurance covers that gap for you. And I can't speak for anybody else, but I know that I was looking at getting gap insurance through my credit union and looking to get it through the dealership. And about the cheapest that you could get it for was $500-600. This was years ago when I bought my super bougie Ford Explorer, by the way. My cars don't need to remain nameless. But I called my insurance agent and asked if they did gap coverage. Lo and behold, they did, for an extra $6.50 a month or something. It was crazy how cheap it was compared to what everybody else was trying to sell it for. So that's my gap insurance story about cars.
Is that what your license plate
Shop
is?
Shop it around.
Super bougie?
Super bougie. I don't have a license plate frame. That's the world I live in.
Oh, I just thought you had personal plates or something.
No personal plates in my world, no.
Hey, I want to do something real quick, and there's a reason behind it. I want Shane to tell us a little bit of backstory on a couple things. One of them is I want to know, because I've always been like massively impressed with him, where he came from, and I don't understand it to the fullest extent. So I want to hear that because, one, I want people, especially right now in the times, the economy like it is right now, to understand that you can do something. The other thing I want to hear is, I know that out where you guys live, you just reelected, in my opinion, one of the dumbest human beings ever to be in charge of insurance for your state.
Sure.
And I just want to hear a little bit about that. So, Shane, if you don't mind, could you give us a little bit of backstory? When you were born in California, you were born Jake from State Farm, and tell us how that worked.
So, funny story. I don't know anybody, and I asked this question to everybody I meet in the industry. I asked them, "Hey, man, what made you decide to get into the insurance space?" And I have still yet to meet the one person. Man, when I was a kid, I wanted to grow up and I wanted to sell insurance. It doesn't happen. So
same thing in our industry, by the way.
Oh, yeah,
no 12-year-old dreams of being a loan originator for a mortgage company.
100%. But here we are. So born in the late 70s in Richmond, California. Single mom. Grew up on the what I call the wrong side of the tracks. Just about, every adversity you can think of, every statistic you can think of for why people don't achieve the dreams that they intended to achieve. That's where I came from. And so met my wife when I was 14 years old. And she mesmerized me. And she was really the catalyst that kind of began to make me look at things through a different light. 19, we had our first kid, got married shortly thereafter. I'm a ninth grade dropout. First real job I ever had was 13 years old. Being broke creates a drive in you like you will not believe. And so very early on, I worked and I out hustled everybody. I wasn't the sharpest tool in the shed, but you weren't going to outwork me. So fast forward 19, we had Serena. 20, we got married, moved out to Vacaville, was working at a steel mill in Richmond. Richmond to Vacaville is about a 45-mile drive. I made that commute daily, working 12-hour shifts, and ran into a guy actually at my church, and he says, "Hey man, have you ever thought about insurance?" And I'm like, "No." As a matter of fact, I knew what I wanted to be. I wanted to be the blue collar guy. I wanted to work with my hands. I wanted to make a good living, and that's where I saw my life going. Never once did I anticipate, wearing some nice digs, sitting in an air conditioned office. He goes, "Hey man, you got the gift of gab." He goes, "I think you will do well." He goes, why don't you give this a spin? Get licensed, start working with this guy on my days off, and I find out I'm making more money on my days off than I am killing myself 12 hours a day driving, 2 hours back and forth to Richmond. So my steel mill that I was working for down in Richmond, we come into work one day, "Hey, letting you guys know we sold. Yeah, all you guys are fired." Guess who's got his insurance license? Okay,
Yeah.
I guess I know where I'm going. So that was the beginning of the career. Worked in on the probably the dirtiest, grungiest part of the insurance industry. It's the high risk auto insurance. Figured out that this is what I wanted to do long term. Knew that wasn't it. By that time, had Devin. So Serena's my oldest, Devin, and then my wife was pregnant with the twins. She's staying at home. I'm the sole breadwinner.
No pressure.
No pressure. No pressure. Well, what it does for you, it creates, for me, you can't fail.
Yeah.
Failure is not an option at that point.
Not when it comes to the kids, man. I get it.
You can't.
No.
Right? You fail, your kids don't eat. Yeah. So knew that this was the path that I wanted to take, knew that where I was at wasn't going to take me there. And so I spent the next 10 years on the job training. I went into the captive side of the business, which is your State Farms, your AAAs, you go there, they sell you their product. That's a captive insurance company.
Yep.
Wanted to figure out how they work, the back office, the underwriting, things along those lines. Hopped back into the broker side. Knew that was where I was going to end up. It's just for the agents, it's much more advantageous, and for the clients, it's much more advantageous. You find yourself an independent insurance agent that has a passion for making sure that you win with your insurance. You can't go wrong. So 2013, stepped out of the comfort of a very well-paying job with AAA and started my first insurance agency with no clients. Walked out the door, again, going all in on me. And I distinctly remember people asking me, man, aren't you like afraid? And I'm like, afraid of what? Fear to me is one of the things that attracted me to AAA, that I went to work there, was everybody had been there for like 25 years plus. I mean, nobody left AAA.
Yeah.
Damn.
They hire this new middle management guy. This new middle management comes in and fires all of the managers. I mean, they come in one day, everybody's gone. That's what scares me. Something out of my control. Investing my time with a company for that long and having them come out and not only are you fired, you can't reapply. That's what would keep me up at night. At least going out on my own, I understand that I'm for the most part in control of my own destiny. So yes. Launched my own agency 2013 with a business partner of mine. Grew it exponentially. 2018, it was time to separate, rebranded myself, and here we are, 2020 into 2022.
So 2018, when you separated, I imagine you didn't start back from scratch.
No, I in certain segments, yes, but started with a book.
Good.
It's like there's a saying that goes, starting over is not bad when you have all of the knowledge, right? So in an element, I did start over. However, I had the knowledge, and end of 2018, get to 2019, COVID hits 2020. Mm-hmm. It's been an interesting few years.
So what did COVID do for your business?
COVID
did your business. I'm not sure which way it went.
To my business, a few things happened. Like Jonny alluded to with the idiot that we reelected. It did a few things. Number one, it forced everybody to stay home. So loss ratios fell. The bottom fell out on loss ratios.
Mm-hmm.
We run a very high,
not as I do.
We run a very high temperature in California for probably the last decade and a half. We run about a 75 to 85% loss ratio here in California. That number dropped through the floor. Now, what should have happened was that impact, had it been able to run out, would have allowed insurance carriers to get back to a level of profitability that would have decreased the insurance rates in California. That's what would have happened. because that's how the free market works, right?
Yep.
What did happen, unfortunately, the insurance commissioner says, hey, all you insurance companies, you need to issue refund checks to all of your clients because nobody's driving. So they did as a means of virtue signaling. Not that they had to, not that they wanted to,
Yeah.
but nobody wants to be the company that doesn't, right? So one does, and then everybody else follows suit. And so in that regard, it really further crippled the insurance industry here in California. And you had people, another thing, like in the business world, you had restaurants that were forced closed by another idiot that got reelected. That business owners will always reinvent themselves. They will do what they need to do to make sure that they stay in business. So I have restaurants that I insured that were turning into grocery stores and selling groceries out of the back of the store.
Yep.
They were running deliveries. And the beauty of being connected with my clients on social media is I can see that taking place. And so I called them up and I'm like, hey, hold on, press pause. Your insurance policy is not structured to do what you're doing. Let me make some phone calls and see what we can do. And here, there's been a few times in my career where I have been more than proud to be an insurance agent. And this was one of those times, because this is what all of my carriers did. They said, hey, we're going to extend for these operations for X amount of time, and we're not even going to charge any extra for the increase in risk, because we want to make sure that these businesses are not stumbled by their insurance.
That's great.
Wow, that was incredible. So the impact was it was pretty harsh.
It's a rough time.
Yeah, it was that way for a number of businesses. I think some elected officials across the country made it tougher on others throughout. I think you were one of them. One of the things that I know about you is you are multi-state licensed. I've always kind of wondered what the reason was behind that, and I didn't know if it was for control, if it was customer service. What the reasons were. So tell me why somebody in the largest state and arguably the most populated state would have multi-licenses.
So we did that as a means of, again, business owners will always evolve. So what we found was when COVID hit and for all intents and purposes, the state shut down, that was the straw that broke the camel's back for a lot of people that lived in California. And so what we found was people started hitting the eject button, and we paid attention to where they were going. Texas has been pulling businesses out of California for a couple decades, so that was a no-brainer. But we noticed that they started going to Oregon. We noticed that they started going to Nevada. And so what we did is, as a means of being able to retain our clients, saying, hey, if you move to one of these states, we still have the ability to keep you should you want to continue to do business with our agency. You know, you trusted us enough to come to us. We assume that you would want to continue that in another state, and they did. And that was the sole reason that we did it, was just a means. We never wanted to market to those other states. We never wanted to.
That's the opposite of what most people would expect.
Right.
Most people would expect expanding your licensed geographic regions 100%. So you can expand into those states. But you were looking you were looking at things and trying to get ahead of losing the book of business.
We're a customer.
Yep.
Sure. But so we pound very heavily on the independent local insurance agent, right? And so again, we didn't. If I can find somebody in those states that says, "Hey, man, I like what you do. I want to hook my train up to you," boom, we can expand to those states. I'll open an office up in those states if I had somebody to run it, to be that local independent insurance agent. However, now, not seeing the future and not foreseeing the chaos that the California insurance market is in right now, Jonny alluded to this, and we can go as deep as you want to go. But insurance in California is the worst that I've seen it in 22 years. And for the foreseeable future, it's only going to get worse.
Tell me what that means to the consumer.
What that means to the consumer is, if you've seen my videos, you can go back and look at my videos on YouTube. I'm always dropping hints on how to win with insurance. Carry a high deductible on your homeowner's insurance. Don't file frivolous claims. Don't hop from carrier to carrier. Those are all things in a traditional market that you do to win with insurance. Now they're paramount. Now they're crucial. Insurance carriers in California right now preferred market will not insure anybody that is not currently insured. So if you let your insurance lapse and you don't have insurance, that's rough. They're looking at frequency of claims. You have a $1,000 deductible on your homeowner's insurance and you have a $2,500 loss and you file an insurance claim for that $1,500 and you have that, once or twice in 5 years, you're gone. They don't want anything to do with you. So what it's called is a hard insurance market, and it's when the underwriters put the screws to everything that's coming through the front doors. Our carriers in California right now, again, never seen this in 22 years. They're telling us, don't send us new business. We don't want it.
Wow.
Don't send us new business. And this is not just a handful of carriers. I'm talking about everybody that's operating in California is in this vein right now.
You think that's coming from fear?
It's not coming
or
from
are there
fear.
Legitimate risk factors at play there?
No, it is absolute. So going back about a decade, in California, we overpay for everything. Everything is insanely expensive here.
Fact.
Oddly enough, our insurance rates compared to surrounding states are lower. It's more expensive in Oregon. It's more expensive in Nevada. Our insurance rates are abnormally low. What should have happened was those rates should have increased as the years had gone on. And what we found, the first thing was, do you remember when to buy a car that had like backup cameras and sensors and electronics and stuff like that, you had to spend like 60, 70 grand to buy one of those cars?
Yep.
Do you remember the point when the Nissan Sentra that you paid 18 grand for started having the backup sensors?
Yeah.
Sure.
So what that did to the auto insurance market is it took what was relatively a cheap claim. You have a little love tap at a stoplight, little bit of paint, maybe a bumper cover, $500, maybe $1,500. It took that to now we have to replace electronics. Now it's a $6,500 claim to replace that. But we didn't change the rates to take on that higher cost at claim. So the insurance carriers knew this. However, they were still profitable in homeowners insurance, boat, motorcycles, your toys, your life insurance. And so they were taking money from the other pots to make the overall profitability. Then the wildfires started and they flipped their lid.
Yeah.
Again, insurance commissioner comes out and says, hey, we're completely revamping the way that you guys pay claims. Insurance company is like, hey, you can't do that. He's like, hey, how are you going to fight me? We're a democratically controlled state.
Yeah.
You can't sue us. So that's when they went into DEFCON. And so right now carriers are trying to figure out, okay, are we going to stay in this state? Because once you leave a state, it is virtually impossible for you to come back.
Mm-hmm.
Geico just pulled out of California.
Wow.
Geico.
I didn't know that.
Overnight. So Geico went to a neighborhood. They wanted Geico agents in the neighborhoods. Instead of selling on the phone, on the internet, they wanted neighborhood insurance agents.
They wanted physical presence.
Overnight, all those offices got shuttered. They shut everything down in California with the exception of a phone call to buy a policy. They're now exiting the insurance market.
Wow.
We've lost 5 carriers that we work with. Came out and said, hey, we're done in California. We're wrapping it up.
Wow.
That's insane. That is insane.
Wow. See, we see that in Texas and I see it in Florida, for hurricanes and natural disasters. And they're pretty hard on the insurance companies when they say that and do that. But just for pure business reasons, that screams. That's not even a little knock at the door. That screams somebody pay attention.
Oh yeah. Yeah, I tell people this all the time. Yeah, the biggest fallacy that people have about insurance is that insurance wants to do the right thing or insurance wants to screw you over, right? At the end of the day, insurance is a contract. It doesn't care. It doesn't have feelings. It doesn't want to do the right thing. It doesn't want to screw you over. It just wants to do what it's structured to do.
Right now, it's the
I like
lawyers.
that. That's really good because those contracts are longer than a lot of people think they are.
Oh yeah,
they are. But oddly enough, they're all built on the same platform.
Yeah,
each individual insurance company just makes alterations to that platform. But yeah,
things are customizable. Obviously, if Johnny's former insurance agent had insured him for $45 a day of rental coverage as opposed to $22 a day of rental coverage and didn't worry about saving him $19 a year, they just saved him $6 a year instead, then he might still be with that guy.
Could be.
That's one of the things. So from my perspective, looking inside, here's some things that I have learned. So, and I'm not going to pretend I don't know enough about insurance to truly pay what I pay for it. So that's where I have to rely on the licensed professional to help and guide, and I've got to trust and believe in. And one of the things that I have found is there are systems that you can't get a hold of, and there are agents that you can get immediately, on a phone call, whatever that may be. So that was something that was massive to me. And I may not remember everything. Matter of fact, I will tell you, I probably forgot 90% of all of the things, but they were explained to me so well that I understood. Now, here's the other thing I wanted to ask Shane. A second ago, you were saying $1,000 deductible on homeowners. Was that just a facetious number, or was that a real number?
That is, I would say that's probably the most common deductible in California.
So
interesting.
Just to give some perspective to that, Mike, in Texas, and he can correct me if I'm wrong because he carries my insurance. In Texas, on your homeowner's policy, it's usually a 1% or 2% deductible on your premium.
Yep.
Our premiums are approximately 1% annually. So when he said $1,000, to me, what I heard was a $50,000 property or $100,000 property, which I haven't seen. So I didn't know if he was just using that number. So in Texas, we have, and this is one thing that's a fallacy, I think, across the nation. We've got a tremendous amount of people that are moving here, no ifs, ands, or buts. We are taxed so freaking high. We're the second highest closing cost state in the country behind New York, and we are taxed so high. Now, people can say freedom comes at a price. It's not, but we are taxed so high, and our cost of goods, the only thing I think that we have that is truly less expensive than the rest of the world, and this is kind of maybe, is our cost of gasoline. Other than that, I think we pay just as high, and I know that our ancillary services like insurance and so forth are just skyrocketed.
Yeah, Texas has some of the highest insurance rates in the U.S., period. And yes, so $1,000 deductible is the most common. We recommend $2,500 at minimum.
I remember when I was when I had my old house, it was $2,500 deductible. It was bought the house for $200,000. It was $2,500 deductible. I ended up with one claim. House got broken into one time. We had one claim, but that was it. And yeah, I can't imagine $1,000 deductible on a home. I'm really surprised that that's the most common.
Yeah,
because that does encourage. I mean, that encourages claims.
Yeah,
it does, and it happens for a few reasons. Number one, insurance agents want to maximize the premium that they're getting out of their clients, so they'll go for a lower deductible. Insureds, for whatever reason, don't think they're able to take care of any more than $1,000 should they experience a loss, and they've never had the deductible explained to them. But $2,500 is the sweet spot in the rate. Any higher, it doesn't really make a significant impact on the rate. Any lower, you are having a significant impact. So, for instance, our average reconstruction cost in California right now is about $550 average across the board. The difference between a $1,000 deductible and a $2,500 deductible could be $600 to $800 off of your premium. That's real money right there.
Yeah, absolutely.
Yeah. See,
so when it comes to stuff like that, do you see most agents just giving the $1,000 deductible option because they're trying to maximize their own profitability and things like that? As opposed to when you do business with people, are you giving them more of a menu option?
So our approach here at the agency, I'm very big on what's called the consultative sales process. And when you approach it from that, I'm not trying to sell you anything. I'm trying to give you enough information for you to make a reasonable decision when it comes to your insurance needs. And so I'm going to explain things like coverages, deductibles, what the impact on it of that is to you. I would say, unfortunately, in our industry, we just hired a new insurance agent, and I actually sent her out last week to my surrounding insurance agencies, and I said, I just want you to walk in, and I want you to get a quote, and I want you to pay attention to the questions that you're asked. You've been here for about 6 months now. You know how we do things. I want you to go sit down with your competitors and listen to the questions that you're asked. The majority of insurance agents anywhere in the U.S. are going to ask you what coverage you have now. They're going to ask you limited information, and they're just going to do enough to give you a rate and hopes that their rate is less than your rate and you're going to move over. Here's something that Jonny doesn't elaborate on. When Jonny came to me, Jonny's policies were written completely wrong. Jonny is paying more now than he was before, but because he didn't have the right insurance coverage. So we put the right policies in place. We structured his deductibles to maximize the premium, but he's paying more than he was before, but now he's covered right.
Well,
that happens more often than not.
Let me add to that. So the great company that I was with before, because every year you test it, you see what the rest of the market is, or every couple of years anyway. And when they were $1,000 higher, okay, $2,000, now we're getting $5,000 higher, things like that. But here's where it really, this is where it set me off, was when we did price them out, and not only price them out, but how do I say this? So once we knew what the correct coverage we were supposed to have was, and we knew what that price was, we had them compete against. So it wasn't an apples for apples. It was this is what we really need. And here's what their response was. This is what their answer was. And I'm not kidding you when I say they truly were surprised when we left. Think about it. We were there for 22 years.
Yeah.
They were truly surprised when we left. They still call every quarter, which I know it's on a CRM system and all of that stuff, asking us if we still feel the same way. So when we said, here's what we want, and here's what we're getting it for, what can you do? What they said was, well, you need to lower your coverage amount. And I said, well, okay, explain that to me. I need to understand that. Well, see, your home value is up here, but what you owe on your home is down here. So let's lower your insured amount down to what's owed on your property as opposed to what the value is. And just to make that make sense, it was, I'm just guessing, it was close to $500,000 difference.
Okay.
And I said, okay, now let me get this right. So you want to insure me at this to lower my premium, But if my house catches on fire and it's a total loss, then you're going to pay out this,
Mm-hmm.
and I can't rebuild this. Well, yeah, but the chances of that happening, and you've got a fire department that's within a half a mile and all this, and that's really, I'm not kidding you. That's what their answer was. They questioned things like, because all they were trying to do was keep my policy. They
Sure.
questioned things like why I had an agreed upon policy on certain cars, even though there was no money owed on, and they truly did. The way that this company was talking to me reminded me of the old commercials. I don't know if you guys ever had that out in California. So in Texas, back years ago, we had insurance by the day. You could truly buy insurance by the day. There was an huge insurance agency here in Houston. You could go to the insurance agency and they would sell you insurance for a day. You get an insurance card. You could go buy a car. You could go get your driver's license, whatever it was. And it reminded me of just that kind of.
It's interesting. It just comes back to the power of giving people options. Just stop trying to talk people into things. I mean, and Shane kind of touched on it earlier. The way that they sell so well is by not selling. They consult, they educate, and that builds trust. And the sale doesn't need to be closed. The paperwork just gets signed and everything happens. And there's no real sale. It's more of a relationship. And when you're working with a trusted party in a relationship, especially when we're talking about mortgage, on the biggest investment somebody's going to make in their entire life, why aren't they allowed to see all the different options? Because at the end of the day, if that insurance agent said, yeah, this is what's going to happen, we're only going to pay out this much, or this is our rate here, and this is what would happen. Here's option 1, 2, and 3. Which one's best for you? There might have been one that was best for you. They might have been able to keep your policy, but they might not have. Maybe their rates were overblown and they were never going to have a chance to begin with. But at least give somebody all the options. If somebody's looking to buy a home and they have 10% down in the bank, don't just give them a 90% LTV option. Give them an option using a down payment assistance program with 0 down and only paying closing costs. Give them an option with 3.5 FHA, 5% down, whatever it is, whatever it works out to be, how much that would come out of pocket with closing costs and how much the monthly payment would end up being with the interest rate that they qualify for. And then, if they wanted to put the full 10% down, give them a few different options. And if they can't make sense of those options, that's your fault. You haven't educated your client enough. Like, plain and simple. It's all about education, giving the options. There's mutual trust, and you work together on stuff. It's not a hard sell.
That's a great.
It's a huge investment.
That's a great point because, I'm sure that you guys have it out there, especially with the price of your properties out there.
Yeah.
But here in Houston, you can drive into a brand new neighborhood that is, and we used to have first-time home buyer neighborhoods. We don't anymore.
Uh-huh.
But you could drive into a first-time home buyer neighborhood and, beautiful houses that you could see straight through to the backyard because they didn't have the money to put the curtains up because of things like that. Exactly. So I'm really glad that you said that. That's something, just because you have the ability to put 10% down, there's not necessarily a need. And one of the things that the guy that we interviewed yesterday on this, that's one of the things he was talking about is using down payment assistance, using some of those outside of the box kind of systems.
There's value in using that stuff, even when you don't need it as a buyer, as a buyer, as a borrower. There's huge value in using down payment assistance programs and low down payment programs, even if you have 10, 15, 20% down, because depending on the person, depending on their financial situation, everybody's different. They know their financial situation way better than you do. It might be worth them taking on an extra $50, $70, $90 a month in order to keep a few $1,000s in the bank just in case something happens, because everybody here has owned a home. You know that things happen. And when you're a homeowner, you don't have a landlord to call and be like, hey, come fix it up. Like, you are the landlord. And if you don't have that extra in the bank, then when something happens, you're going to be hosed. And I mean, it could be the difference between putting 10% down or using a down payment assistance program, even though you don't need to. But if you're not presenting those options, then that person never has a chance to make the best decision for themselves.
Thank you so much for bringing that up.
It's true. That's how Shane's doing business in insurance. It's not just mortgage. It's insurance. Shane's not an insurance salesperson. He's an insurance advisor.
Yep.
He's an educator. And also happens to be an expert on the policy. So when Jonny has a question about what exists on line 42 of page 7, Shane can explain that to him, which is my wife. Which is super necessary. But the reason that you moved all your policies to him is because he gave you a few options, but the recommendation on the recommendation wasn't the cheapest.
Well, there's a number.
His professional recommendation was about what was right for you.
Yes. Umbrella policy. Nobody had ever explained to me umbrella policy before. Yeah. He explained to me what an umbrella policy was, and why I had it and why I needed it and why it wasn't enough. The other thing, and here's something that's going to blow your mind. Shane Eastman is the only person, and I know that he sells it.
Yep.
Shane Eastman is the only person I have ever dealt with in any kind of, not only insurance, but financial at all, that has never tried to sell me. You ready?
Yeah.
Life insurance.
That's great.
My credit cards sell me life insurance. My car sells me life insurance. Every day, telephone commercials sell me life insurance. Every day, television commercials show me, and it's just constant. And it's one of those things, if you go back to Buffett, when everybody's running towards something, run away.
Yeah.
I get sold life insurance at least, and I'm going to guess part of it is an age thing now at 54.
Yep.
But I get sold life insurance every single day of my life, and we've never spoke about life insurance.
And there's a reason behind that. Life insurance is one of those things that people don't see the value of life insurance until they have an experience.
Yep.
So earlier, Mike was talking about gap insurance.
Yep.
Now, I don't know too many people that I can recall that have ever brought up gap insurance before. Mike has had some type of interaction with gap. Either he experienced.
I used to sell cars.
Okay. So
I saw it happen a lot.
So there has to be an experience. It has to hit home before that sparks that conversation. Otherwise, it's a lost cause.
Well, that's awesome. That means that I've got to pass away before I start thinking about life insurance. So that is awesome.
100%.
You don't. I've started thinking about life insurance. I had a stroke a couple months ago, so that was an experience, and it makes you reevaluate about everything in your 100%. Life. We got you for a couple more minutes. I don't want to keep you for too long. We're coming up on an hour here, which has been a great conversation with you. But I got to ask a selfish question. I need a tip or a trick as somebody who's taking their California property and casualty license exam in 2 weeks.
A tip or a trick for someone that is taking their P&C exam in 2 weeks. Tip or a trick, always seek out the most correct answer. And I don't know if this is once you become licensed in your home state, you don't have to do other states, and I don't know if other states are like this, but in California they structure the exam so that you're not just remembering key phrases, but that you understand the concepts. And so they'll have a 70% right answer, and then they'll have a 100% right answer. And that's kind of how they get you.
Gotcha.
Always look for the most correct
I like
answer.
that. I'm going to use that as a superpower because I feel like I'm better at understanding concepts than memorizing key phrases. So hopefully that works in my advantage.
I want to take it one step farther, just for 30 seconds.
Yeah.
You get a guy like Mike that gets his license. What does he look for to hang that license?
You look for independent agent number one, that first and foremost. But you look for, if I were entering the business December 30th, 2022, I would look for the most forward-thinking independent insurance agency that I could find in my local area. Insurance is very antiquated. We are probably about 20 years behind the curve in a lot of things. And
So you're right even with mortgage, is what you're telling me.
pretty much. So the average age of an agency owner in America is like 62 years old right now. Very, very behind the curve. So
you're right. You're just describing the mortgage industry, man.
100%. Now, can I give you a tip for mortgage people?
Yes.
Yeah.
So from the insurance side of things, the two biggest gripes that we have with the mortgage space is short-sightedness when it comes to interacting. I can't tell you how many mortgage brokers will call me and say, hey, I need you to give me a quote on this house and I need it to be at this rate.
Oh, yeah. Interesting.
So stop chasing rate because your DTI is at its max limits.
Yep.
Find an agent that will structure the right policy and then finesse something to get your DTIs right, and then correct the policy after close of escrow if that's what needs to be done. But number two, establish a solid relationship with an insurance agent.
I will agree with that one 100%.
We can even take that to real estate agents as well.
Yeah.
Whether you're mortgage, real estate, anybody who deals with homeowners on a regular basis.
Well, of the two,
that's absolutely
brokers,
a valuable relationship.
I think mortgage people do a better job of cultivating relationships with the clients. The realtors that we deal with tend to be very transactional. I just want to sell this one house right now. They're not thinking about, I want to sell this one house right now, and then statistically speaking, in 6 years, when you sell this house to upgrade, I want to sell that house and help you buy the next one. They don't think that far. They may be out there, but in our experience, my experience, they don't think that far.
It's because there's too many of them. There's too many real estate agents out there.
100%.
They're how many million, Johnny?
1.6 million.
Ugh. Crazy.
Now, here's something. I was speaking on stage. So Shane and I have a mutual friend that has a very large insurance group on Facebook. Everything that I've ever seen, I met him in a couple coaching groups, and I've spoken on stage for him before. One of the things that he was on the independent insurance agents. Well, I guess it wasn't just independents, because there was also, you guys have a name for a monkey in a box or something like that. Whatever it is, the guys that work for the big box names. But one of the things that he said, and he was on the insurance agents, is he asked me how long I had been in the mortgage business. And at the time, I was coming up right on 28 years. I had just hit like 28 years. And he said, how many insurance guys have ever been into your office? And I stopped and thought about it for a second. None. Never had an insurance guy once step in my office. I've stepped in a few insurance guys' offices, but I've never had one step in my office. And that's one of the things, because that's one of the things I tell realtors all the time. Go visit your mortgage guys. They're not enemies. Go visit them, because they usually have more pre-approved buyers. I think that that's something that I would give to the insurance industry. Go step foot in, call up, make an appointment, go have coffee, bring something of value, but go make a team with your local mortgage guy.
I like that. And vice versa.
I think the hesitancy from the insurance agent standpoint is nobody wants to hitch their wagon to one mortgage broker.
You don't have to.
Absolutely not.
We can't hitch our one wagon to one real estate agent.
No. I got you. I'm just saying that's the thought process.
Yep.
If I go to, because especially here, you have, I would say in Solano County, you probably have a handful of people that are doing the majority of the business. And then you have a bunch of people that are doing, 1 or 2 loans a month.
Yep.
Those people that are killing it they have their relationships established, and they're not willing to talk about anything else. And so the insurance agent's standpoint is not the right concept, but I don't want to hitch my wagon to one guy that's doing 1 or 2 loans a month and then tick off another guy. Hey, I'm not going to refer my business to you. 100%.
That's crazy.
It's running scared.
Hey, I want you to do me a favor, Shane. I want you to reach out to Angela Monk. She's right there down the street from you in Solano County. She's part of the Solano County Board of Realtors. She happens to be part of our company, and she's going to have me come out there and speak again at least once or twice at Solano County Board of Realtors. So I want you and her to meet. It's important to me. So if you would do that, I would greatly appreciate it.
I will reach out to her today and sponsor all of those events.
And for anybody out there who's looking for a relationship with an insurance agent or an insurance company, or you're looking to restructure or have an audit or get new insurance for yourself, Shane, what states are you guys licensed in, and where can people find you?
California. We are licensed in California, Oregon, Nevada, and Texas, looking at a few others. You can find us anywhere. Google Eastman Insurance Solutions. www.eiscalifornia.com is the website.
Perfect.
Yeah, you can find me anywhere.
And I'll toss those links in the description or the comments on whatever platform that you're watching or listening to this on, so you'll be able to find it.
Awesome.
Thank you so much, Shane. We appreciate you being with us.
Thanks for having me. It was a blast.
Absolutely. Take care, guys.
Thank you, sir.